In this video, I will reveal to you one of the best and most consistent MACD strategies. It is very simple and easy to use and works in almost every single market. So, let's get right into it. The MACD, or the Moving Average Convergence Divergence, is one of the simplest and most popular technical indicators used by traders. Essentially, it is a trend-following indicator that uses two moving averages to find trends in the market. Now, if you are an experienced trader, you've probably used or heard about the MACD indicator before. But the MACD indicator by itself is just solid and can't work efficiently on its own. So, make sure you watch this full video to see how I pair it with some other indicators to make it perform much better and achieve a higher success rate. Firstly, let's add the MACD indicator to our chart and explain how the MACD actually works. To add it, simply go to the Indicators tab on TradingView and type in MACD and click the one at the top. So, before we start, we need to know how the MACD actually works. The MACD is made up of four different components: the MACD line, the signal line, the histogram, and the zero line. The MACD line, which is the blue line, represents a 12-day moving average. The signal line, which is the orange line, is usually a 26-day moving average. Next, we have the histogram, which represents the difference between the MACD line and the signal line. So, for example, the smaller the space between the two lines, the smaller the histogram gets. The bigger the space, the bigger it gets. You can also see once the MACD line crosses above the signal line, the histogram turns green, and if the MACD line crosses below the signal line, it turns red. And finally, we have the zero line, which basically just represents the center of the indicator. Now that we know the four components, let's make sure we know how to use them. The MACD indicator is insanely good at finding trends in the market. So how you can tell if a chart is about to have an upwards trend is by looking for a cross upwards between the MACD line and the signal line. So, for example, here the MACD crosses above the signal line, indicating the chart is in an upward momentum. And here, the MACD crosses below the signal line, indicating it's in a downward momentum. Traders can also use the histogram to indicate how much momentum there actually is. So, if the histogram is getting bigger, that means there is an increase in momentum. If it's getting smaller, there is a decrease in momentum. So, how do you want to use this indicator is very simple. For long positions, you use it only when the line crosses upwards, but only if they cross below the zero line. If they cross and it's above the zero line, you wouldn't enter a trade. It's the same thing with shorting. You can only enter a short trade if the lines are crossing downward and are above the zero line. So, as you can see, this indicator is extremely easy to use, but the problem most traders encounter is that they use this indicator by itself. Let me tell you why this doesn't work. The MACD indicator works extremely well if the market is in a trend. So, for example, here, the MACD indicator is doing a great job indicating when the price is about to move upward, because the chart is in an upward trend. But here, for example, the price is in a downward trend, but the MACD is still signaling to buy long even though the price is going down. To fix this issue, for example, if we are trading long, we only want to trade if the market is in an uptrend. You never want to trade against the trend because the odds are it will always be against you. So an easy way to figure out if the market is in an uptrend, you simply need to add a 100 or 200-day moving average. Both will work just fine. To do this, simply go to the Indicators tab, type EMA, and click on the first one that says Moving Average Exponential, and it will be added to your chart by clicking it once. After that, you go to the top left and click on the settings of the EMA. Change the length of the EMA to 200, and after that go to the Styles tab. I like to make mine yellow and increase its thickness, but you can do whatever you want. Once we have the indicator added, you'll see a single line. If the price is above that line, the market is in an uptrend. If the price is below that line, the market is in a downtrend. So, after learning that we only want to trade in an uptrend market if we are going to long, all we have to do is put this all together. We buy if the MACD line crosses below the zero line mark, and the current price is also above the 200-day moving average. This will guarantee that you are only trading when the market is in an uptrend, which is a very powerful combo. Now, if you wanted to short, for example, you would just do the exact opposite. Make sure the price is below the 200-day moving average and the MACD lines are crossing downward above the zero line. So, as an example, we would enter a long trade right here, because the MACD lines are crossing upward below the zero line, and the current price is above the 200-day moving average. Now, what I like to do is set a stop loss below the 200-day moving average so the EMA line almost acts as a wall that the price has to break through to hit my stop loss. Then I like to have a 1.5 profit ratio for my profit target mark. So as you can see for this example, the strategy worked exactly as we wanted it to and we made money. But we can still make this trading strategy even better. The MACD strategy combined with a 200-day moving average works extremely well, only if there is a lot of price movement. Where the strategy starts to get kind of speculative and gives false signals is when the chart starts going sideways and starts losing momentum. So as you can see here, the chart is moving sideways and lost almost all of its upward momentum, and the MACD is giving lots of false signals. If you traded here, odds are you probably lost money. To fix this issue, we have to combine the MACD with price action. To do this, identify a key support or resistance where the price hits and bounces. So as you can see, the price goes down, hits this point, and reverses upwards. The next step is to wait for that price to hit the same key level again, and once it does, we are expecting the price to bounce off this support and go upwards just like it did before. But as a clear side note, just because we made the support and it bounced off this before doesn't mean that it's always gonna do it again. It can easily break through the support and drop lower if it has enough momentum. If we want to make sure the price is about to change in momentum, that's when we bring out the MACD indicator. So what you would do is make sure the price is above the 200-day moving average. Once the price hits the support, wait for the lines on the MACD to cross below the zero level, and that's when you enter the trade. I just revealed to you one of the best MACD strategies with an extremely high win rate that you can use right now. All I ask for in return is that you take 2 seconds out of your day and like this video. If you want to stay up to date with my future strategies, make sure to subscribe. And in the meantime, you can also check out my other videos. Hope you guys learned something new from this video, and I'll see you in the next one.